Hello folks, welcome back to an update of AppLovin stock, which is a tech company in the ad tech space. Ad tech is short for advertising technology. If you're not familiar with AppLovin, just think of it as a digital marketing company for app users and marketers. Anyway, I think AppLovin is a hidden gem in the current market, and you and I have stumbled upon it well before the broader retail investor community. Congratulations. But in this video specifically, I want to go over 5 things, and they are key insights from the latest earnings report, AppLovin's cheap valuation, a look at the ad tech sector and broader market, technical analysis, and my predictions for the share price. As part of the predictions, I ran a time series machine learning model, which gave some pretty interesting results, so please stay until the end to catch a glimpse. Alright, so let's dive into earnings first. Last week, AppLovin released its quarterly earnings report for Q4 of 2023. I discussed the results in my last video, so I'll just give you the highlights before we move on to the juicier stuff. The highlights of the latest earnings report were strong revenue growth of 36% year over year, back to being profitable after a loss last year, and being cash flow positive even after paying off $170 million in debt and $7 million in investments. Another interesting insight I got from this quarter is how strongly their software segment is growing in terms of revenue. 4 years ago, software made up just 20% of their total revenue, but now that is more than 56%. Their software segment is where the real growth is. Their app segment basically provides AppLovin with user data, which they are then able to monetize on their software platform. So essentially, their app business feeds their software business. Another interesting insight is their free cash flow. Why is free cash flow so important? Well, free cash flow will allow a company to do things like pay down debt, buy back shares, make acquisitions, and pay dividends. AppLovin is doing all of the above except for paying dividends, which I hope they delay for as long as possible. And with the cost of capital so high at the moment, free cash flow is becoming more and more valuable. Last quarter they had over $340 million in free cash flow. It's been rising for the past 4 years, and recently it's started to accelerate. Here you can see a chart depicting further growth in the near future. At the current rate, AppLovin should be able to create well over $1 billion in free cash flow over this entire year, which will help it to pay down its debt even further and buy back more shares. All in all, it was a very strong earnings report, and management gave a pretty soft revenue target for next quarter, which should easily be beaten. AppLovin is actually quite cheap relative to its peers, so much so that an analyst was actually bewildered at how cheap AppLovin was trading in the Q&A session of the latest earnings webcast. Watch this.
Moving on to Jason Bazinet with Citi.
Maybe a long-winded question, but I can't help but look at your stock, and the multiple seems so low to me given the attractiveness of your business and the growth and the free cash flow conversion. Do you think your multiple is low because of the two divergent businesses that you have between the software platform and first-party games? And does that still make sense to hold these two businesses together, given that one is phenomenally attractive and one is just good? Thanks.
When it comes to the question of where we trade, why we trade at the certain multiple we trade at, but we can't answer that. We're not traders, and it's very hard to unpack, does mobile gaming discount the overall company valuation? We don't frankly believe so, because the core software business is growing so quickly and we break out financials, so it's pretty easy to just say, let's just look at the software segment. We think the harder part when it comes to our business is that we were in a no growth period in 22. We've had to come off of that and really focus on execution, which is what we asked of our teams. And now we put together 4 subsequent quarters of stellar performance. And as you look at that software segment, there's not a lot of software businesses with 70% plus EBITDA margin growing at the rate that is. I mean, rule of 140, 150 or whatever. And so it's just an astounding number. And then we convert a very high percentage of that EBITDA to cash flow as well. So we think because the technologies are new, it'll take a while for investors to understand what we already see, which is not only is this very powerful technology in our core market, we've been able to grow much greater than the market is growing because this technology is efficient. And in conjunction with that, our partners are growing much faster too. And you see some of these games that are in the market today at the top of the top grossing, they depend on our marketing channel, and they're growing because our solutions become more efficient.
So let's look at AppLovin's forward PE relative to its peers. It's currently trading at 20 forward PE compared to LiveRamp at 24, Trade Desk at 52, and PubMatic at over 134. So AppLovin is a growth stock at a great valuation. What is there not to like? Moving on to competitors and the broader market, let's do a sector analysis. AppLovin is part of the ad tech sector, which includes companies like The Trade Desk, PubMatic, and LiveRamp. Mega caps like Google and Meta are part of this sector too, but because of their size, we'll ignore them in this video. The ad tech sector is still recovering from the bear market of 2022, like most growth sectors. However, the future for the ad tech sector is strong, with its research house predicting over 11% CAGR in TAM until 2030. By the way, AppLovin has risen from the ashes, recovering its market cap much faster than its competitors. As you can see in this chart, AppLovin is the blue line at the top, and it's leaving its competitors in the dust. Furthermore, the stock market in general is in a bull market, despite what the bears say, and we are also more and more likely to get a soft landing in the economy. So the outlook is looking good for AppLovin, its sector, and the broader stock market. Anyway, let's move on to technical analysis. So let's take a look at the daily chart of AppLovin. As you can see, there was quite a bit of buying here as people anticipated a good earnings report. The huge pop after the release is a great follow through and demonstration of the bullish underlying sentiment. The huge volume, not only just over the past few days or weeks, but over the past 12 months, indicates that there is tremendous demand for the stock. The demand is so strong amongst institutional investors that AppLovin could not find any investors to buy back their shares from in the last quarter. Have a listen to this.
And I saw the 1.2 billion authorization on buybacks, but I don't think you bought back any stock in the quarter. And yet your guidance is good. You knew it was going to be above the street. So my first question is, can you just comment on sort of the tactical pause in the fourth quarter on buybacks?
Jason, just from a strategic view, our approach to doing buybacks is to do directed large repurchases rather than buy back in the open market. That's how we feel like we can have the most impact. And the opportunity didn't present itself in Q4 to do a large buyback from an existing shareholder. So to the extent that that does present itself in the future, that's the approach that we're going to take.
Now let's zoom out to the weekly chart and look at AppLovin's entire trading history. AppLovin's made a nice recovery to regain about half the share price crash it experienced in 2022. Judging by prior trading, it looks like the next resistance level might be at around the $80 to $85 mark. Beyond that is the $100 to $110 band of resistance. If AppLovin continues to produce good results like the latest quarter, it should be able to blow through those resistance levels no problem. Finally, my price predictions. In the last video, I predicted that we will see $60 in the short term. Well, in less than 1 week, we are already there. As of this recording, AppLovin is trading at $60.10 after hours. So where to next? Well, in the short term, it could retrace 20% or go up 20%. It's hard to say because it's run up so much over the past few days. In fact, I ran a time series machine learning model to predict what might happen. This is what the algorithm spat out as a prediction for the next 2 weeks. As you can see, it's calling for a savage retracement in the share price. Now, I don't put too much weight towards time series predictions because they're often wrong. But let's say it actually happens. If it does come back down in price, I would be open to adding to my position anywhere below $50. Also, anyone on the sidelines who missed the initial bounce might be willing to hop on board. Management might also start buying back shares again, which would help support the price even further. My personal opinion is that in the short term, the price is more likely to rise to around $70 over the next 2 weeks. But that's just my guess and is in no way a recommendation. Let me know in the comments what are your predictions for the next 2 weeks. Can we beat the algorithm? Let's find out. In the medium term, let's say over the next few months, I think AppLovin will test $80 and another good earnings report in 3 months should push it to over $100. These predictions are contingent upon the broader stock market holding up and nothing coming from left field to slow down AppLovin's progress. So that's it from me, folks. Let me know in the comments below what you think of AppLovin. Do you own it? Do you like it? And don't forget to hit that like and subscribe button to see future videos. Alright, thanks for watching and see you next time.